Welcome to sportsbookreview.com. I'm Flash, and today it's going to be all about Bitcoin and the state of the markets. I'm with David Belle, from the Growth Director at TradingView and the owner of macrodisiac.com. Welcome, David. How are you?
Hi, Flash. I'm all good, mate. Thanks a lot for having me on.
No, it's absolutely my pleasure. Before we start, obviously, we're going to talk about Bitcoin halving, the state of the markets, and also how changing is Bitcoin going to be after the halving that's going to go on tonight. But prior to that, can you just let us know and give us a little bit of your background?
So yeah, I've been a trader and involved in financial markets for about 10 years now. So I'm 27. So about just when I turned 18, I kind of got a real interest in it. Throughout that period, everything has kind of changed in terms of what the markets are looking like, if we consider kind of what the central banks and governments have been doing over the last 10 years. But yeah, I set up Macrodisiac as a kind of almost an outlet for retail traders and a new way to think about entering the market. I think a lot of retail traders like to look at charts a lot, and I think the macro picture is more important. But yeah, I'm a growth director at TradingView as well. We're doing really, really well at the moment. I think we've seen about 23,000 new accounts a day open up since the start of March. So I think that's really showing the interest in the markets at the moment.
What is Bitcoin, David? I mean, a lot of people, we see it all over the world, we get it mentioned, but there's so many people that don't actually understand what is Bitcoin.
Well, I mean, if you want to go the most basic terms, it is a cryptocurrency. If you want to get more technical, there are various ways that you can get technical about it. I'm not one of those technical guys. I consider it as a high beta asset class. That's my view. Some people consider it a currency. And I think you can consider it in both ways, really. From a trader's perspective, all I really care about is, making money out of it. I don't really trade it a lot. But if there's a decent opportunity, then I might have a go at it. There's the ideological kind of view as well, that is kind of a backlash against authority, a backlash against central banks, or protection against government. It's quite libertarian in that sense. But I consider it a high beta asset class that you can make some cash out of.
With the current state of the markets at the minute, we're looking and we're seeing more institutional investors getting involved, and obviously that's going to underpin Bitcoin in itself.
Yeah, I mean, I think the main headline at the moment is Paul Tudor-Jones getting involved with it. He's a really, really well-known hedge fund manager, hedge funds out in the BVI. And yeah, I think he's invested about 2% of his portfolio in Bitcoin. Now, whether that is outright positions on Bitcoin or whether he's trading it as, a spread or a different way to what most people would invest in Bitcoin, that's something that can be questioned. But he has come out and said that he is actively involved in the cryptocurrency.
Yeah, which can only be a massive positive. Now, can Bitcoin sit alongside gold as a commodity rather than a cryptocurrency?
Well, my view is that it largely is a commodity. It's an asset. If we look at its efficiency as a payment system, I don't really think it is that efficient. Because if you look at the length of time that it takes to actually process a transaction, it's probably not quicker than faster payments that we have in the UK. Possibly other countries have more inefficient means of payment when it comes to paying with fiat currency. But it does take a little bit of time to process, sometimes 4, 5, 6 hours, Whereas if I want to pay, a UK bank account here, then it will be instant. So you've got to think of it from that way. So that's why I primarily think of it as something that, is a hedge against certain things and also a way to make profit.
Bitcoin halving tonight. First of all, what is Bitcoin halving? And secondly, how's it going to affect price sentiment? And are we expecting it to go up? Because obviously there's going to be less in circulation.
So the Bitcoin halving is when miners earn 50% less reward, essentially, for the Bitcoin that they mine. So naturally, you might think that it would lead to prices having to increase. In markets, though, there's always the issue of, are we buying the rumor and selling the fact? So has the market already priced in this move that everyone's expecting? Or is it totally unpriced in, and we're looking at an appreciation in price later today? It's a very, very volatile time to be involved in it with such a big news event. And now, I wouldn't say provide any advice, because I'm naturally not allowed to. But with any major news decision, you probably want to either be really, really low risk invested, or you might just want to wait and trade the aftermath or buy the aftermath. That's from a trader's perspective, of course. If you're longer term, then it might be largely irrelevant.
But with the state of the markets at the moment, I think we're not going to find out how bad things are until maybe 3 months down the line, when we have GDP, then we have like the income results. There's more going to the wall. It's almost like we're going to go into recession. Inflation's going to go up. So a safe haven is always been gold. Now, if you're saying that Bitcoin can also run alongside gold, then surely many more people are going to run to the hills and take up Bitcoin.
Yeah, I mean, the problem is that we saw in the first bit of downturn back in March that all risk assets tended to converge to one. So whether you were invested in, bonds, gold, or equities, they all faced a bit of damage to the downside. A lot of that was to do with having to meet margin calls in the equity space. People will be highly leveraged, so they might have to sell off some of their risk-off positions to get some cash to actually pay their broker or their clearer, because they might have been 50% down or whatever, and naturally getting a margin call. But I think that long term there is definitely a case for Bitcoin to become the new gold. It depends whether you consider it maybe an inflation or deflation hedge, and naturally whether you consider it a hedge against, as I mentioned before, central bank policy. Because I think central bank policy really, really is detrimental at the moment. We're seeing risk premium compression occur, where everyone just wants to pile into equities because there's no way to achieve a risk-free rate of return elsewhere. Interest rates are way too low. So everyone's just like, yeah, let's just buy equities. We can make some money there. And it's almost like a Ponzi that they've created, the central bankers. I rail against them. I absolutely think their policy is totally detrimental. But as a trader, you can't really care that much. You can't get too emotional about it. You can only really trade what you see and what's going on,
With the way Bitcoin is at the minute, is it a case of risk first, or is it reward? Because obviously risk and reward, they go together. But when you're looking at Bitcoin, you're thinking this could go. I mean, listen, we had hit 20,000 less than 3 or 4 years ago. And funnily enough, on the back of the last halving. So when you're sitting there at 89, maybe $9,000, you're like going, well, there's plenty upside. And then it could take off because obviously there's going to be less around.
Yeah, naturally it does depend on the risk to reward profile. I like to consider it with something called optionality. So you've got certain outsized risk parameters. Now, of course, it does depend on your time frame. If you're day trading this, then maybe it doesn't really matter. You're just looking at the next level to get in, and then the next one after that to get out. But as a Bitcoin investor, maybe you're looking at it as being, yeah, we're down, maybe 60% from the highs. Yeah, why not have a punt and see and get out maybe if you're at 5k, because the potential reward is quite big there. It's at least 2 to 1, and that's what we look for as investors. We look for outsized rewards to risk, and I think that there is an adequate opportunity here, especially if you do think that the macro, the bigger case, is that the halving will lead to bigger returns and a push back up to those all-time highs.
And there's more and more people going to be understanding and seeing Bitcoin because there's so many economics or so many countries that their economics are just so false. I mean, they're printing money. There's going to be a massive drop off in a few months' time, as I said, with earnings, because there's going to be so much that go to the wall. So then people are going to be thinking, well, do I want to go on the roulette wheel, which is the junior markets in London or in America? Or am I going to then go with an alternative that so many other people are going to dive into?
I think it's always a case of never being totally exposed to just one thing. Bitcoin is a high beta asset, and by that I mean it is very volatile. There is quite a lot of risk involved in it. And with that, you can always make a case for, look, have 10, 15% of your portfolio in Bitcoin, and then have it invested in US equities, which just keep going up because the market doesn't care about fundamentals necessarily. It mainly cares about liquidity and where that next liquidity injection is going to come from. And if the Fed are always willing to go lower on rates, if they're willing to increase the balance sheet more, and if the government is also willing to provide fiscal stimulus, the market is just saying, we don't really care. We just want to sit on the bid and just keep the market going up and keep buying. Because there's not really anything else out there at the moment that is consistently going to go up. Like equities, like US equities. So, I think there's a big case just to have both involved in a portfolio.
But when you look at it and you're saying to yourself, well, this here is in a state, and when you said fundamentals are everything that is built on when you're going into anything with risk and reward. Now, if you then have got a situation that fundamentals are going out the window, then is this not a perfect storm? And over the next 3 to 6 months, the perfect storm for Bitcoin?
Yeah, it definitely could be. But at the same time, there's more things going on in the Bitcoin markets than just whether there's a certain narrative that's occurring in macroeconomics. For example, in Bitcoin markets, you've got maybe 0.01% of the participants who have massive holdings, who might just, dump a load on. You don't really care about the narrative that's going on. And that can scare participants, and that can make participants more wary of actually entering, I think, especially if you've been around for a little bit and you've experienced it a little bit, you've been battered by it before. Things like that can degrade the narrative a little bit, I think. But longer term, I think longer than 6 months we're looking at if we want to really, want to see that narrative, that real anti-Fed, anti-central bank narrative come to fruition.
Yeah, I mean, when you look at Bitcoin and you think to yourself that so many people have not dived in because, one, they obviously don't like change. That's a human trait. But also they don't know enough about it. So as more it gets into the mainstream, the more that people will become inquisitive. And then that's when the volume's going to push up.
Yeah, no, I think that's right. I think it also, there is also a case for institutional adoption, which has allowed, the CME futures has probably aided a lot, probably negatively since we saw the top when the CME futures were introduced. But yeah, if more participants are allowed to get into it, and not necessarily just in a high frequency market making function, which a lot of them are involved in at the moment, then yeah, there is definitely a case for it pushing up in value in that sense as more people get involved.
And a lot of these things come down to the confidence over time. I mean, we're now starting to have a little bit more confidence in looking at the Bitcoin, maybe the chart. Obviously, on the back of free record days as recently as the last 10, then there was a massive gap. And all of a sudden, you're looking at it going, well, it's got to come down. It's got to test that level. And then will it rebound off? Now, beforehand, it was really volatile. It's still volatile. But if you can then gain a confidence that you're actually going to be seeing marks and will we push through, or is it going to come back and test? Once you gain that confidence, then even more people are going to be coming in.
Yeah, naturally, I think we have to consider the different participants as well. You've got people that are actively looking at charts. You've got people that are hodling, as they like to call it, who are basically long-term investors who don't necessarily care about price swings. They are largely more ideological, so probably do romanticize the use case of it and romanticize, again, that anti-authority type narrative. And then we've got the traders who are, looking at it maybe on different swings, on different time frames, and just trying to extract cash. And then, as you say, we've probably got the smaller person who has maybe heard about it from his mate or her mate, and might hold a little bit, might pay for something in a kind of novel way. They're saying, "Oh, look at this new thing! I've paid for it. This," and you have to just really think about all the different participants at the same time. As a trader, I don't necessarily care about those other participants. I'm probably just looking at it from the fact that I want to extract profit from this level to that level, and what could these other guys be doing?
Yeah, I mean, I look at it all and think to myself, it's risk, reward, it's confidence. But the big thing for me is that if you've got an alternative to gold that you can actually bring across and again diversify, and it's another market you trust, then why would you not get involved in it? David, I really appreciate your time, and maybe in a couple of weeks we could have another chat on maybe something different, and then obviously we can get something going where we can take up a little bit more of your time. I appreciate it, David Belle, Growth Director at TradingView and owner of macrodisiac.com. See you soon, David, and thanks a lot, mate.
Cheers, Flash.
You take care. So that's our Bitcoin halving. I'm hoping that it's given you a little bit of information and a little bit of confidence going forward. If you like this video, then press subscribe, ring the bell, and we'll let you know when any content's coming on so you won't miss a thing. And we'll see you again soon. You take care.